a tricky calculation question, this one. It looks easy to start off with, but it's deceptively difficult. So we're asked to calculate a company's return on investment. And we're given some figures up here. Capital employed of $200,000, a cost of capital of 12%, and they tell us the residual income of the business, $36,000. Okay. Now, if they gave you all the numbers you needed, this would be easy, this question. You'd just be putting numbers into a formula. But the examiner likes to challenge you and stretch you, and so doesn't always give you all of the information you need in an accessible way. So in this kind of question, I always start off with the formula. Return on investment is the one that we need here. Now, I like the return on investment formula. It's a really simple one because the name of the formula tells you how to do it. Return sat on investment. But it's not quite as straightforward as I've made it sound. You need to know, well, what do they mean by return and what does it mean by investment? Return here is profit before interest and tax, and the investment is capital employed. Now, if I go back into the question, which of these figures do I have already? Oh, I've got capital employed. Lovely, that 200,000. But there's nothing in here to tell me the profit before interest and tax, or in some questions it's written as operating profit, but normally profit before interest and tax. It doesn't tell me what that is. So my return on investment is a missing number of profit before interest and tax divided by this 200,000. So how can I work out PBIT? Now, this is going to require our problem-solving ability. It's going to require us to use the residual income number here of 36,000 and to work backwards. So we'll need our residual income formula to start with. So there's my formula for residual income. I take the profit before interest and tax, or operating profit, but normally PBIT, and I subtract off the cost of capital of the business, here 12%, times by the capital employed. This is an imputed interest charge. And what it's saying is how much of the business's profit is left after we've deducted a charge for the funds that are tied up in running the business. So our residual income here, we're told in the question, was $36,000. The PBIT figure, well, that's our missing number, isn't it? So I'm just going to put some question marks in for that. And I know all of these other figures. The cost of capital percentage, that's 12% out of the question. And the capital employed is $200,000. So let's simplify that down. All I've done there is multiply out my 12% times $200,000. The reason it's in brackets is because I'm doing that bit first, aren't I? So 36,000 is equal to my missing number of PBIT minus 24,000. Now I'm going to have to rearrange this formula to work out what PBIT is. And remember, the golden rule of rearranging formulas is you have to do the same thing to both sides. So I can rearrange this formula by adding $24,000 to both sides, which gets me to a PBIT figure of $60,000. All I've done there is add 24,000 to this side to get that bit to zero, leaving me with just PBIT here, and added $24,000 onto the same side, following the golden rule. Onto the other side, I have to add 24,000 as well, which gets me up to the 60,000. And so now I can use my 60,000 of PBIT and put it in here into my return on investment formula. Lovely. So my return on investment is $60,000 divided by $200,000, which comes out at 0.3 or 30%. Remember, to turn it into a percentage, I have to multiply by 100. So lovely. My answer here then, and I've got to be careful of what the unit is. Okay, it's saying it in percentage terms. That's 30%. Excellent. All good.